Good afternoon, all. Welcome to Marsden Jacob Associates Talks Live webinar series. Today's topic, Navigating Australian Water Markets. My name is Simo Tervonen, and I'm one of the speakers today. And nice to see that so many of you could join us today. At the outset, I'd like to acknowledge country and note that Marsden Jacob Associates acknowledge the traditional custodians of the lands and waters across Australia, where we conduct our business. We also pay our respects to their ancestors and elders, past and present and emerging. So just quickly, today is part of the Talks Live webinar series, where we share our insights across a variety of sectors. And today's topic is about water markets. So my name is Simo Tervonen. I'm a principal with MJA, and I'm a self-proclaimed leading water market expert and a proud water market nerd. So water markets, they are my thing. That's what I do day in, day out. I've been involved with the water markets for more than a decade now, first at a major water broking company and now for almost 7 years with MJA. And I dare say I pretty much looked into each and every water market in Australia in a professional capacity. And our co-host for this afternoon is Erika.
Hi, everyone. I'm Erika Veld. I'm a senior consultant with Marsden Jacob Associates. My background is in water markets as well as economics and energy policy. Before joining Marsden Jacob Associates, I was working with Sunwater, which is a bulk water utility provider up in Queensland. So I was managing their temporary and permanent water trading strategy across the Queensland water supply schemes and conducting some high-value water tenders as well. And then before Sunwater, I was an energy market analyst back in the US.
So a brief overview about the topic. Water markets. As many of you know, Australia has a dynamic and sophisticated water market. Well, let's face it, it's a complex market. So when it comes to making informed and good decisions, it's important to, have access to up-to-date data and information. And now it's a very topical time to discuss water markets because the new water year just started this week, and we're all very excited about that, aren't we? So it's the perfect time to reflect on the previous water year, look forward to the new one, and we'll also demonstrate our Waterflow platform and show you how you can use that to make good decisions and navigate through the water markets. And a quick reminder, this webinar is not a Water Markets 101 type thing. If you need a refresher on your water market basics, you can watch a recording of a previous webinar, Simplifying Water Markets. And now over to Erika, who's going to give you a bit of a recap of the last water year.
Awesome, thanks, Simo. So that's right, I'll kick us off by looking back at the previous water year that was, or the 2023-24 water year that just wrapped up last week. So we'll start off by looking at the Southern Murray-Darling Basin allocation market. So here we're saying the key drivers of the Southern Murray-Darling Basin allocation market were water availability, demand, trade restrictions, and market sentiment. So just to dig deeper into this graph that we have here, basically we're showing the last two water years. In the back, in the shaded gray area, we have the total storage levels. In the dark blue bars, we have the monthly volumes that have been traded. And then we also have in the colorful lines the average prices that were experienced for the key trading zones across the Southern Murray-Darling Basin allocation market. So if we look at the very first bar that shows July 2022, and the prices there were all below $100 per megaliter across the allocation market, and throughout the water year, prices just continued to decrease pretty steadily until the end of the water year. So this is different from July 2023, or the start of this previous water year, where prices started much higher and then continued to climb throughout the year in the first few months of the water year, and then peaked around October. So if we think back to the start of this last water year, we're actually experiencing periods of below average rainfall and above average temperatures. And then in September, the BOM, or the Bureau of Meteorology, declared an El Nino in September of that year. So we could see that impacted the prices and pushed up activity in the market as well. You could see in the blue graphs, the trading volumes were quite high for Q1 of the water year. But then in October, we start to see the prices declining quite a bit. At the peak last year, we saw monthly average temporary water prices around $200 per megaliter in some of these zones. Individual trades were $250 per megaliter. But then after that, we started seeing the prices fall throughout the year. So I'll show you in the next slide why that might be. So this slide is showing in the left-hand graph a simplified version, or just a snapshot of the previous graph. It shows the last 12 months only, the last water year, and then the average price across the different trade zones. And the graph on the right shows from the Murray-Darling Basin Authority, using BOM data, the Murray system inflows, which is an area that geographically sort of represents the Southern Murray-Darling Basin schemes. You could see in this inflow chart in the bold pink line, the October inflow that occurred last year coincides perfectly with the inflection point in the price graph. So you could see after prices had been climbing for the first few months in October, we experience an inflow, and then prices start decreasing again pretty significantly. There's also a January inflow that occurred, which also coincides with an inflection point in the market when prices really just started to soften for the remainder of the year. In the graph to the right, you can also see an inflow actually occurring at the beginning of the water year. So in the June-July timeframe, we had the highest inflow. We don't see this as obviously impacting the prices for the last year. And this is potentially due to it being just occurring at the start of the water year. So people are still figuring out their trading strategies for the year, or their cropping strategies. But there is a chance we could speculate that if these inflows did not occur at the beginning of the last water year, that perhaps the prices could have started much higher in July 2023, and maybe they would have reached a peak higher than the $200 per megaliter that we saw in October. Next slide, please. So this graph is now switching gears. We're looking at the trade limits across the Southern Murray-Darling Basin allocation market, and how that could have impacted the prices between the different zones within the southern regions. So because many of the trade limits were reached or at capacity throughout the year, we say that trade limits ended up segregating the markets and resulting in price differences between some of those key zones. So the graph on the right, you could see we've broken out some of the key trading zones in the Southern Murray-Darling Basin. And then what we're saying is the delta between the top lines and the bottom lines throughout the graph is a result of those trade limits segregating those markets. So for example, the Barma choke limit was effectively at capacity for the whole year. The Goulburn to Murray IVT restriction was also in place for most of the year. And then the graph to the right shows some interesting movement in the Murrumbidgee IVT. So at the start of the water year, we could see that the Murrumbidgee IVT trade was open in both directions. But as the water year kicked off and trading really increased throughout the first few months, we saw the Murrumbidgee IVT in trade limits reach. So the Murrumbidgee IVT in was closed, which coincides back to the left-hand graph, where the Murrumbidgee zone prices were some of the highest that we saw across the Southern Murray-Darling Basin. As the year progressed, and after January, when we saw those inflows, the Murrumbidgee IVT actually flipped completely, and in a very short period of time now, the Murrumbidgee IVT out closed, which coincides with back to the pricing graph, where the Murrumbidgee prices were some of the lowest across all of the trading zones within the Southern Murray-Darling Basin allocation market. Next slide, please. So to continue on, these are two interesting graphs we wanted to share also with the Southern Murray-Darling Basin allocation market. The first graph on the left shows this previous water year in green, as well as the 3 water years preceding. We've also labeled this past water year was an El Nino water year, and the 3 before were all La Nina water years. So the interesting part about the La Nina water years is that the prices, which is shown here in volume weighted average prices and dollars per megaliter sense, the prices all peaked in July of that water year and then continued to decline basically month on month through to the end of the water year, which is normal for a La Nina water year, because as inflows occur under wetter conditions, the market prices continued to soften over time. So in comparison, the 2023-24 water year that we saw last year as an El Nino water year, the prices started a little bit lower and then ended up increasing as the months continued until that October timeframe that we mentioned previously, where the inflows occurred, and that's when the prices started to soften for the remainder of the year. So ultimately, the second half of the year, or the last 3 quarters of the year, I suppose, looked quite similar in the price curve as the La Nina water years. However, if the inflows had not occurred, we would have expected a more normal El Nino water year price curve, where prices could have continued increasing throughout the year. Just one thing to mention, the 2020-21 water year that we show in the light blue at the top, where prices were above $300 per megaliter, that's due to that water year just coming off of some drought years. So it's still a hangover, I suppose, of some of the previous dry years that were experienced before 2020. That graph also has lines for storage levels for the last 2 years. So the top storage level percentage line is for the 22-23 water year, and the line just below it is for this past water year. So you could see the storage levels across the board stayed quite healthy over the last 2 years, which is likely why the prices did not peak much higher than that $200 per megaliter mark across the board. The graph on the right-hand side was also an interesting one. So we looked at the cumulative allocation trade volumes over the last several years. So the line, the green line at the top is this past water year, and then we also include the 3 prior years, as well as in the orange line at the bottom, a representative drought year, so 2007-2008. We looked at about 20 years worth of data, which we've cropped out for simplicity, but basically every year we saw volumes fall between the orange line and the top dark blue line. And we found that this past water year in green basically had an all-time high in terms of cumulative trade volumes for the year, and by a pretty clear margin as well. So we think that's due to kind of the initial rush to the market in August, September, and October as part of the initial dry conditions and the El Nino declaration that we saw at the beginning of the year. Next slide, please. So we'll switch gears here a little bit and jump to the Southern Murray-Darling Basin entitlement market. So this is looking at the high security and high reliability markets across key zones in the Southern Murray-Darling Basin. And we've zoomed out a little bit to look at the last 3 water years, just to show how there's less variability in terms of pricing in these markets compared to the allocation market. So here we found the Southern Murray-Darling Basin entitlement market is driven by longer-term resource availability, commodity markets, and agricultural trends. We're also seeing that over the past water year, a bit of a softening. So the last 12 months in this graph, prices have dropped a little bit. We also saw, when we're looking at the trade volumes in the blue bars, the last month was the second lowest that we saw on record since 2007. So the market is generally contracting and slowing down a little bit. And so we think that this pattern might be due to a few different factors in the commodity and agricultural markets. So first off, wine grape growers in the region have been struggling with import tariffs from China over the last few years. So we're seeing some of them now come to the market and sell off their entitlements. We're also seeing commodity prices soften for almond and citrus crops, which is likely impacting some of those growers and their capacity to buy new entitlements on the market. And we've also generally seen an increase in production costs and cost of living and increases to cost of farming. So we think that combined has sort of led to the softening of market activity in the Southern Murray-Darling Basin entitlement market. Next slide, please. So now we're looking still at the entitlement market, but looking at the general security and low reliability markets. So similar to the last graph, we are showing some of the key zones across the Southern Murray-Darling Basin, and the bars at the bottom are showing the volumes that have been traded. And here, similar to the high security markets, if we're looking at the last 12 months, we are seeing some of the lowest trade volumes this time since 2008. So there's generally not too much to report on here. The low reliability markets have generally been pretty quiet. One thing to note is the Murrumbidgee general security market activity has increased during the second half of the year, which is shown in the top lines. This is also the first year where we've seen Commonwealth involvement in the market in about a decade. So as Commonwealth involvement continues, we'll also continue to monitor, I suppose, the potential impacts that has on the market, or if it doesn't have any impacts at all in terms of the short-term and long-term market prices and market activity. Next slide, please. So now we'll move up to the Northern Murray-Darling Basin markets. So here, there's not a lot of high security entitlements on offer. So we're focusing on the general security entitlement market, as well as the allocation markets. So in the first graph, we're looking at the general security entitlement prices, and this is zoomed out as well over the last 3 water years. You could see the prices in the lines above have been increasing quite significantly over the last 3 years, whereas the volumes have remained quite steady. And we're highlighting specifically the Namoy and Border Rivers catchments, where the price increase has been very strong. So starting off at around $4,000 per megaliter for general security entitlements, reaching up to $10,000 per megaliter, and for the border rivers up to $12,000 per megaliter, which is a very significant increase over a short period of time. In the allocation market, so the graph on the right-hand side, we're seeing prices increase as well as demand increases for allocations in this market. We see in the shaded gray area in the back, which represents the Northern Murray-Darling Basin total storage levels, that the storages in the north have decreased a little bit more than the storages in the south. However, overall storage levels are quite healthy compared to the drought years that have been experienced in the past. Next slide, please. So this is my last slide on looking back at the water markets. Having worked in Queensland previously, I wanted to spotlight Queensland and make sure it gets some time on our webinar as well. So I wanted to touch on some key water market events that happened throughout the state within this past water year. So to start with, I want to highlight just a few key differences between Queensland water markets and the Murray-Darling Basin or the New South Wales and Victoria water markets. And the key one is that Queensland's water markets are quite isolated from one another. So their trade zones are segregated geographically, and for the most part, you can't trade water allocations across these different zones. So the markets as well as the trading zones are very localized. So to start at the top, there was a big water sale in the Mariba-Dimbula water supply scheme, which is just west of Cairns. So Sunwater and the State Department completed an irrigation infrastructure efficiency upgrade. So this was a project funded by the National Water Grid Authority. They expected to save 8,300 megaliters of irrigation scheme losses. But once the construction was completed, and they conducted their assessment on updated losses. They found that they had actually saved 11,500 megaliters, which is a really great result. And volumes were auctioned for 3 weeks last April and May on the Ruralco and Water Exchange platform. And these were medium priority allocations sold at about $3,200 per megaliter. And just south of Mariba is the Burdekin-Houghton water supply scheme, which is home to the Burdekin Falls Dam, which is the largest dam in Queensland. And they're undergoing a dam improvement project currently. And they announced last year that they will conduct a 2-meter raising of the dam wall. So this will increase the dam capacity by 31% and add another 500 gigaliters to the storage capacity, which will increase the availability of medium priority allocations in the system by 150 gigaliters. So this adds to the pool of already unallocated volumes in the system, but the idea is this will support future water demand and emerging and transitioning industries in North Queensland. Closer to southeast Queensland is the Bundaberg water supply scheme. So one of the key storages here is called Paradise Dam. So this dam is also undergoing a dam improvement project. And they've announced this past year that although the existing dam structure is safe, the dam wall cannot be repaired in its current condition. So they're actually going to build an entirely new Paradise Dam directly downstream of the existing structure. And this impacts the water market because currently there's over 100 gigaliters of medium priority and high priority allocations quarantined within the water plan in order to retain water security for the current entitlement holders in that region, which will only be released once the dam construction is completed. And lastly, in the south is the Condamine-Balone water supply scheme. So the Southern Queensland water supply schemes actually overlap with the Northern Murray-Darling Basin. So in the Condamine-Balone, the Commonwealth conducted a Bridging the Gap water tender. They wanted to purchase 14 gigaliters of unsupplemented surface water in the system, as well as 3.2 gigaliters of groundwater. Ultimately, they were able to purchase 5,210 megaliters of unsupplemented surface water, and they paid over $7,000 per megaliter, and they were not able to secure any groundwater as part of this tender. And I'll hand over to Simo next to discuss water markets looking forward.
Thank you, Erika. So now it's time to dust off the old crystal ball and look into the future. Well, I suppose more to the present because the new water year has just started. So what is the starting position? Climate-wise, as Erika mentioned, the current storage levels, especially down south, are still very healthy, so nowhere near the drought year levels. And some of the main climate drivers, including the BOM's ENSO outlook and also the Indian Ocean dipole, are currently indicating a fairly neutral weather for the time being, as is the 3-month rainfall outlook for the July to September period, which is indicating fairly typical or average conditions for the majority of the basin, noting that some areas might receive just slightly below average rainfall in July or August. But all in all, there's no clear trend that can be observed either into a drier or wetter sequence at this stage. So we are expecting fairly average conditions for now. Next slide, please. And the broader climatic position obviously underpins water availability for this water year. And the opening allocations across the basin have been announced this week by the state authorities. And in these tables on the left-hand side, we have the main catchments in the southern and northern basins and their opening allocations. And as a comparison point, we have also included last year's opening allocations. So starting from the south, as you can see, the high security allocations in the New South Wales Murray, Murrumbidgee and South Australian Murray systems are unchanged from last year, whereas the Victorian Goulburn and Murray systems have slightly lower high reliability allocations this year compared to last year. obviously no low reliability allocations yet early in the year in Victoria, but in the New South Wales, Murray and Murrumbidgee systems, the general security allocations are a tad behind from last year's opening allocations, but still it's a fairly good opening allocation for those systems as well. In the north, many of these systems operate on a continuous accounting basis, so it's more important to look at the available water balance and the volumes that were carried over with general security entitlements rather than looking at the announced allocations. And as you can see here in the Lachlan, Macquarie, Lower Namoy, quieter systems, still a very healthy amount of water is available on general security accounts. Yes, in some areas lower than last year, but still really good volume should be available for water users in the north as well. And these opening allocations are underpinned by water in storages, and the MDBA map on the right-hand side is showing that on average, on a whole of basin level, storages are approximately 77% full. So a pretty good opening position in terms of water availability. Next slide, please. So another way to look at the resource availability in the Southern connected system is to look at how much is actually available for consumption. So if all the environmental allocations and carryover are excluded, how much is available for other users. And here you can see that already the current position, based on the initial allocations and volumes that were carried over from last year, there's much more water available, for instance, compared to the last really dry year, 1920, which is represented by the red dotted line here. So already 1st of July, there's much more water available, and gradually that volume is likely to increase depending on the inflow scenarios. So this analysis only looks at the outlook to the 1st of November, according to the state government outlooks. So, but already by then, under an average inflow scenario, almost the same volume would be available compared to last year. And the main difference there being that last year the Goulburn and the Murray systems got a very generous low reliability allocation in Victoria, but this year by November that's unlikely to happen. Maybe in the Campaspe under a wet scenario, but other than that, that's the main difference. And as you might note, the wet scenario actually indicates a lower volume to be available than under the average scenario, and that stems from the assumption that under a wet scenario, we assume that a proportion of carryover water will be lost in Victoria due to spills from the spillable accounts, and also in New South Wales due to accounting rule spills. And in the other scenarios from extreme dry to average, some of the water in Victoria, some of the carryover water will be on a spillable account, so not really available for use or trade until a low risk of spill is being declared, but it's not lost yet, so therefore we've included that as available water. But the conclusion from this analysis is that the big picture availability in the Southern Basin is unlikely to change significantly this year, which is good news. Next slide, please. So the new water year has started, and some initial prices have been witnessed in the market. Not a whole lot of activity yet, and it's typical for the first week or the first couple of weeks that the market is still finding its feet a bit. But we have seen some trading activity, and depending on the zone, prices have ranged from $65 per meg to $150 per megaliter. And already there are multiple trade limits that are impacting the market and creating price differences between zones. The most important ones of them being the Bama Choke limit, Goulburn to Murray IVT limit, and the Murrumbidgee IVT our trade limit, and these are all closed for trading, as is effectively the New South Wales to Victoria trade limit that actually right now is open for a small volume, but effectively it is closed for large-scale trading. So these trade limits will continue to shape and impact the market in terms of price differences, and will continue to do so as long as they are binding. Next slide, please. An interesting observation we have made in our work is that the early days of the spot allocation market in the Southern Basin in the new year, they tend to be quite strongly influenced by the forward water market. So in this graph over here, we have the Murrumbidgee forward contract prices, the blue dots on that graph, overlaid against the eventual spot allocation average prices. And as you can see, late last year, the spot allocation market was trading at very low levels, at $5 per megaliter at the end of June. And now it has jumped based on the initial trades back to $130 per megaliter, which is exactly within the price range that was achieved for forward contracts that were struck last year for water to be delivered this year. So it goes to show that the forward contracts have really set the expectation for the market in terms of water prices, and therefore they tend to heavily influence the market during the early days, or even the early weeks of the new water year. After that, the usual drivers kick in a bit more and shape the market. So availability, demand, trade limits, and market sentiment. And all of these things can change very quickly. So navigating through all of this does require up-to-date data and information to make informed and good decisions. And platforms like Waterflow can help you with that. So we'll have a quick demo of the Waterflow platform in a minute. Next slide, please. So what can we expect then in terms of temporary water prices in the Southern Basin this year? As said, water markets, they are sensitive to many supply and demand side drivers. And resource availability perhaps is the strongest one of those drivers. And looking at this graph from Waterflow, you can see that compared to some of the most recent dry years, the storage levels in the south in aggregate are nowhere near those levels. So, and that should underpin the resource availability being quite good this year. So this means that we don't anticipate prices to reach those drought year level highs this year, because the starting position is really good, and there's a healthy amount of carryover in the systems, and also the opening allocations are fairly strong. Obviously, price differences will and have already emerged because of trade limits, so prices will vary between zones, and it is possible that if there's an isolated trading zone with high demand, for instance, if the Murrumbidgee IVT would be closed for in-trade and there is strong demand in the Murrumbidgee catchments, and also if the general security allocations build up slowly, then it is possible that higher prices can be achieved under those circumstances, potentially even higher than last year. But it all depends on the resource availability and the outlook, and also sentiment. So if we are going to witness another La Nina year, as we saw from Erika's recap, prices then they tend to peak during the first quarter. If we are then alternatively seeing a drier sequence eventuating, then we might see a more traditional price curve in terms of prices increasing towards the summer months, and then either continuing to increase or then softening a bit, depending on the next year's outlook. So, but all in all, the big picture availability really hasn't changed materially. So therefore, we are not expecting to see anything too crazy in terms of temporary water prices this year. Next slide, please. So how about the permanent water market then? Well, it's pretty obvious. All eyes are on the Commonwealth buybacks potentially beginning or continuing this year. But when will this happen? Where, in terms of which catchments? How, in terms of what sort of market mechanism may be used? And how much, in terms of desired volumes? These are all, burning questions we all want to get answers to, but sadly, at least I don't have any answers to you right now. So basically, you guys will know as soon as we will. However, some interesting observations can be made based on last year's Bridging the Gap tender outcomes. So this analysis looks into the New South Wales Murray general security market. And, the tender outcomes, the prices have been out in the public domain for some time now. And yes, some firm prices were achieved in that tender, both in Zone 10 and Zone 11, compared to the rest of the market and the data that can be found in the registers. But it appears that even though the tender outcomes have been out in the public domain for some time now, the rest of the market has not taken these prices as the new price benchmark, but rather has continued to trade at the same levels that were seen both before and after the tender, and also after learning the results of that tender. So it implies that the market is mature enough to understand the difference between these two things. So a one-off government tender for a specific target, and then the continuous open water market. Obviously, things might look different if in the future there are subsequent tenders that roll over round after round. Then the impact to the price benchmark might look a bit different. It also depends on the depth of the open water market and the location and the entitlement type. But for now, these are some of the things we have observed that we thought were worth sharing to you guys. Next slide, please. More broadly, I think the MDB entitlement markets are in a very interesting position. As you can see from these graphs, both the southern and the northern entitlement markets, trade volumes have been declining over the last 10, 15 years. And it goes to show that permanent water is getting more and more tightly held. So for anyone to enter the market looking for large quantities of water, be it the federal government or anyone else, it's not going to happen overnight, because frankly, these markets are not that liquid. So it's going to require a long-term strategy and a long-term focus to acquire large quantities. And I think, as we learned from Erika's recap, these two markets are sort of organically heading into opposite directions. In the south, many of the entitlement prices are softening, whereas in the north, they are increasing quite significantly. So it creates an interesting dichotomy to the market, and it remains to be seen how the market reacts to various, demand and supply side drivers this year. And we will let you know if we observe something interesting beyond this webinar. We will continue to do our routine water market updates through Waterflow and our social media. So watch this space. We will keep you updated. But all in all, I think the new water year looks very interesting on both sides, temporary and permanent market. So, and to navigate through those complex markets, tools like Waterflow can help you. So now back to Erika, who's going to give you a bit of a rundown of Waterflow.
Yep, thanks, Simo. So if we go to the next slide, we have a pre-recorded video for you where I've just run through some of the key features of Waterflow. And yeah, feel free to ask us any questions about Waterflow, either as part of this webinar or offline as well if you're interested in learning more. Hi everyone, and welcome to the Waterflow demonstration. If you'd like to follow along, you can enter waterflow.io in your search bar and just have a click around or register for a free account using the top button here. If you're exploring Waterflow at a later time and have any questions or feedback, feel free to reach out to us. We have our contact information just at the bottom of the home page here. So we'll start off by having a look at the Market Overview tab. This tab includes a lot of really great water market information to help with your analysis and decision making. So across the top bar here, you can navigate to different market segments to find some of the latest pricing information. We also have information on current storage levels and allocations for different water types. And we also collect information here on the connectivity across the trading zones and any trade limits which have been reached. So you could see basically one consolidated view of the IVT limits and whether they're open or closed here. So if we just have a closer look at the temporary price tab, you could see for different trading zones across the Murray-Darling Basin where the last few trades have landed. And if you want to look into the 5 latest trades, you have a little bit more detail here. And if you click See Market Details, this will show you for that specific zone and market a little bit more information in a dashboard format. So you could see here the last 12 months, how the price has trended over time, as well as some information about the volumes that were traded. It also shows here at a glance the zone map that you've selected, the relevant storage levels and allocation levels. And there's also a function here where you could compare the live listings. So we have buy and sell listings buttoned here. And this can also be accessed from the sidebar where we have a buy water and sell water option. So I'll just jump into buy water as an example. You could select either temporary or permanent volumes and enter your volumes here and search. So this will show you all the available sell orders for the volumes that you've searched and for the zone that you're interested in. And the great thing about Waterflow is it'll tell you if there's a trade limit balance that applies. So here there is no balance. There are no trade restrictions for this trade that you've selected, but if there was one, it would show up here as well. Next, I'll show you another cool function within Waterflow, and that's to receive notifications. So here you can edit rules and add a rule. You could add either a price alert or a trade limit alert. So I'll just jump to price alert. If you're interested in buying or selling allocations, you could select whichever one, temporary or permanent, and then you could select the price here that you're interested in, as well as the zone. And then if you save the notification, that now comes up as one of your saved alerts, so you'll receive an email when the price drops below whatever level you've chosen for the zone that you're interested in as well. Now we'll jump to a few premium features, so that's through this button here on the sidebar. You'll only see this if you're a premium Waterflow user, but this will take you to a dashboard that is only visible for those premium users. And basically what it shows is for the zone that you're interested in, which is selected through the settings, you have a neat dashboard that shows a summary of some important trading information. So it has information on temporary trades, as well as permanent trading prices, storage and allocation levels, and then connectivity for that relevant zone. You also have a few neat graphs, so the annual trading summary, latest trade information, and then a 5-year summary as well based on information within Waterflow. And premium Waterflow users also have access to this data export feature. So for the markets that you're interested in, as well as for allocations and storage levels, you could select some of the information that you're interested in and export that data into an Excel file, or you could just view it within the platform itself. So you could see a little bit more granular data about trades that have occurred over time. You could also change the date range here and go back even many years if you'd like to. We also have a more simplified reports function here, again for premium users. So here you could see this graph might look familiar from our webinar, but you can also select different zones, and then that simplifies this information here in an exportable graph. So lastly, I'll navigate back to the home page. And here we have a Water University. So this is a great resource for people who just want to refresh themselves on some water market information. So we have a Water Markets 101, as well as some fact sheets on trade rules and limits, water products, water glossary, things like that. We also link to some of our previous webinars. You can also find under our blog section here, previous webinars that we've done. We also post our water market updates here, which we'll continue doing as the year progresses. And then under other services, it provides another way for you guys to get in touch with us if you have any questions, comments, feedback on Waterflow. You could leave your information here and insert some comments. We always love to hear feedback on the platform and are always seeking to make it better for our users. Awesome. Thank you for listening to that. And just to add, if you're interested in any of the premium Waterflow content, I just want to mention that we can actually tailor the subscription based on your needs. So if you saw certain features here that you're interested in, but you're less interested in others, you're able to sign up for basically varying tiers of access, which has associated costs as well. So if you have any questions, definitely get in touch with us, and we're happy to run through Waterflow and its capabilities in more detail and do a more personal demo for you as well. So with that, I think we have some parting insights on the next slide. Thanks. So looking back, in summary, we spoke about the key drivers of the Southern Murray-Darling Basin allocation market, being water availability and demand, trade restrictions, and market sentiment. We also saw in the allocation market an all-time high in terms of annual trade volumes. And despite the El Nino declaration, we saw several inflows and rainfall events, which led to decreasing water prices over the course of the year. Across the Southern Murray-Darling Basin entitlement market, we're seeing less volatility than the allocation market. This is because it's driven by longer-term resource availability, commodity markets, and agricultural trends. And across this market, we're seeing generally a softening in market prices and lower volumes being traded. In contrast, in the Northern New South Wales general security entitlement markets, we're seeing prices in the catchments and trade zones increasing over the recent years, so seeing more activity in the north compared to the south.
And looking forward to the new water year, the opening position is quite encouraging because storage levels are very healthy. The climatic drivers are indicating neutral conditions, and the resource availability overall is good, which means that allocation prices are not expected to reach drought year levels this year. But things can change quickly in a dynamic market. So to navigate through water markets, access to up-to-date information and data is pivotal. Thanks for listening the presentation part of the webinar.
So thank you to everyone who's joined, and for my co-host Simo, we hope you found the session to be valuable. We hope you also stay connected, so you can receive a notification when we have another webinar, and don't hesitate to get in touch if you have any questions on Waterflow or what we presented today. We're always happy to have a conversation, and have a great remainder of your day.
Thank you all.
Thank you.